Have you ever wondered what sets successful investors apart from the rest? What if I told you that their triumph isn't solely due to market knowledge or analytical skills, but rather the mental frameworks they employ? Research suggests that 90% of financial success comes from mindset and personal habits, while only 10% is technical knowledge. In today's video, we are diving deep into the psychology of financial success and exploring the mental frameworks that empower successful investors to not only build wealth, but maintain it over the long term. We'll look at the scientifically backed strategies and mindset shifts that anyone can adopt, regardless of where they currently stand in their financial journey. When I first started investing, I was overwhelmed and fearful of making mistakes. I would pore over charts and listen to countless podcasts, yet felt no closer to finding my footing. But then I learned about mental frameworks, and my perspective shifted dramatically. Today, I want to share those insights with you, insights that could potentially change your financial life forever. By understanding and implementing these mental frameworks, you'll be able to navigate market volatility, minimize emotional decision-making, and make smarter investment choices. Throughout this video, expect to unlock 10 essential mental frameworks that all successful investors share, so stay tuned. I promise it's going to be incredibly rewarding. Let's kick things off with frameworks 1 and 2, starting with an investor's crucial mindset, long-term thinking. The majority of novice investors fall victim to instant gratification and short-term gains, leading them to make impulsive decisions based on market trends or fads. But studies show that the most successful investors think years, not months. Warren Buffett, for example, famously holds investments for decades, stating that if you're not willing to hold a stock for 10 years, you shouldn't even consider holding it for 10 minutes. Research indicates that investors who maintain a long-term perspective achieve approximately 1.5 times higher returns than those who frequently trade. The strategy here is simple: set clear, long-term financial goals and eliminate distractions that might sway you off course. Write down your goals and review them regularly to keep your focus sharp. The second vital framework to adopt is emotional detachment. Successful investors understand that emotion can lead to disastrous decisions. Even seasoned investors can get caught up in the excitement of a bull market or the panic during a bear market. A study by the Behavioral Finance Journal revealed that 80% of investors experience regret or fear when making decisions based on emotion. On the contrary, a framework of emotional detachment helps you analyze situations more rationally. When you feel the urge to react emotionally, take a step back and assess the situation. Keep a journal or record of your thoughts during market fluctuations to develop a more objective perspective. Now let's move on to the third framework, which is the growth mindset. Psychologist Carol Dweck's pioneering work highlights the importance of a growth mindset, the belief that abilities and intelligence can be developed. Successful investors embrace failure as a stepping stone to success instead of fearing it. They analyze their losses, learn from them, and adjust their strategies accordingly. A survey conducted by Fidelity showed that investors with a growth mindset are 60% more likely to take calculated risks. To cultivate a growth mindset, keep a failure log where you analyze investment mistakes and review key lessons learned. This way, you create a habit of continuous improvement. The fourth framework is risk management. Understanding risk is a key component of financial success. Most people shy away from talking about risk, but mastering it will set you apart. An investment's risk should be measured by both its potential return and your personal risk tolerance. The famous investor Peter Lynch once said, "Know what you own and know why you own it." Research shows that a systematic approach to risk management can increase potential returns by 20% just by avoiding common pitfalls. Create a personalized risk assessment tool that categorizes your investments according to risk levels. You want to ensure that your portfolio reflects both your financial goals and your risk appetite. Let's switch gears for a moment and talk about the fifth mental framework: continuous learning. The financial landscape is constantly shifting, and it's critical to stay informed. Embracing a mindset of perpetual learning sets successful investors apart from the crowd. Studies reveal that those who allocate a minimum of 30 minutes a day to learning about finance and investment trends outperform their peers by a margin of up to 40%. Whether it's reading books, taking online courses, or listening to finance podcasts, carve out that dedicated time daily to cultivate your financial intelligence. The sixth framework is leveraging relationships and networks. Successful investors understand the power of collaboration and information sharing. A study by the Kaufman Foundation found that 86% of successful entrepreneurs attribute their success to networking. Having mentors and a solid support system can provide you with invaluable insights and perspective. To build your investment network, attend local meetups, join investment clubs, or even leverage social media platforms like LinkedIn to meet like-minded individuals. Now, as we head into the seventh tip, let's delve into the importance of patience. There's a saying that patience is a virtue, and in investing, it could be seen as the secret ingredient to success. According to a study by Dalbar, 90% of investors are unable to beat the market returns over long periods of time due to impatience. The most successful investors understand that creating wealth takes time and are willing to endure short-term fluctuations for long-term gains. Create a financial forecast for your investment portfolio to visualize the potential returns over time. This can help you maintain perspective and patience as market cycles unfold. The eighth framework is adaptability. The market is unpredictable, and so are the global economic factors affecting investments. Studies show that adaptable investors tend to be 50% more successful than those who stick rigidly to their plans, even when conditions change. Look at how major investors like Ray Dalio pivoted strategies as global economics shifted. Successful investors continuously reassess their strategies based on evolving market conditions. Make a habit of quarterly reviews of your investment portfolio and remain open to reallocating assets to better align with market shifts. Now let's tackle the ninth mental framework, the importance of decisiveness. In financial markets, uncertainty is the norm, and this can often lead to paralysis by analysis. Surprisingly, research from MIT has shown that swift decision-making can enhance investment results by up to 30%. Successful investors trust their research and insights, allowing them to make confident decisions. To develop decisiveness, establish a checklist for your investment criteria. When you see an opportunity that meets your requirements, act on it without overthinking. Lastly, the 10th framework is cultivating gratitude. It might sound unconventional, but successful investors practice gratitude to maintain a positive outlook. A study published in the Journal of Financial Planning showed that investors who maintain a gratitude journal perform better and feel less stressed during market volatility. This can help to reduce feelings of fear and greed, leading to more rational investment decisions. Spend a few moments each week reflecting on your financial journey, celebrating both successes and lessons learned along the way. Now that you've learned about the 10 powerful mental frameworks for financial success, let's take a moment to reflect on how difficult it can be to implement these consistently in our daily lives. The fact is, while knowledge is essential, the real challenge comes from making that knowledge actionable, especially amid the demanding rhythm of our everyday routines. And that's where MindSwift comes in. This incredible app is designed to make consistent learning seamless and efficient by breaking down key financial concepts, investment strategies, and essential skills into easily digestible 15-minute audio lessons. It's like having an AI-driven coach who personalizes everything based on your learning goals and integrates into your busy schedule. Personally, I've experienced significant growth in my financial literacy using MindSwift, completing dozens of lessons in just a few short months. They're currently offering a free trial to my viewers, so you can take that first step toward deepening your financial knowledge without any risk. Just check out the link in the description below, and I guarantee you'll thank yourself for taking that step in your financial journey. In conclusion, mastering the psychology of financial success involves adopting mental frameworks that empower you to think, act, and respond like top investors. By integrating long-term thinking, emotional detachment, a growth mindset, risk management, continuous learning, strategic networking, patience, adaptability, decisiveness, and gratitude into your own investment approach, you can position yourself for extraordinary success in building and retaining wealth. Remember, these 10 frameworks are not just tips. They are a holistic approach toward cultivating the right mentality for financial success. The truth is, we often get overwhelmed by the noise of market trends and investment fads, but cultivating a solid psychological foundation can help you rise above those distractions. Take the time to reflect on which frameworks resonate with you and consider how you can implement them today. The journey to financial success is a marathon, not a sprint, and with the right mindset, you can navigate that course effectively. Don't forget to explore the link to MindSwift in the description for your free trial, and if you found value in today's insights, be sure to like, subscribe, and hit that notification bell for more transformative content that will help you on your financial journey. Together, let's build a community of financially empowered individuals who thrive in the realm of investing and wealth building. Thank you for watching, and until next time, embrace the mindset of success.